So I was just wondering about this graphic, and there's probably a little bit more to it we can talk about. The tail strike, it could be like a news event, and see how these guys are orchestrated. You know, the momentum and you know, the fear and the panic and stuff like that. Or the retail guys, this is the crowd, and of course there's, you know, the accomplice up here, and he's helping out as well. I'm not sure what the calf, how that comes into the analogy, but basically you could probably argue there are entities at play and they're working together against the retail guys, and so that's something to perhaps, you know, we could maybe look at this analogy in that respect. Male, female, you've got your master slave, you've got your, you know, dominant, submissive component to the markets, where this guy is going to be pushing orders, this guy is going to be taking those orders, and then it can just reverse and things like that. So they'll try and spoof the market, scare the market participants. They'll then go on board and go, yeah, okay, yeah, it's a sell. They'll then push the price down. The guys will buy it, and it just works. And they'll work in tandem, and they'll want something to go one particular way, so they'll push that price in order to get price to go to their direction. Now the thing is with us, the retail traders, is that we don't have the pockets of these orcas. We're just simply tiny small fry with tiny accounts compared to these guys. So we are at the whims of the big fish, I suppose we can say. So I think what we need to do, because they're not really affording like large moves, we might just be wanting to be looking at the scalping, maybe for the robot especially, because that's very systematic and we don't intervene at all. If you're manually trading, you could probably do swing trades, but you'd want to be looking at your weekly chart or daily chart. But even so, it can do a little bit of damage. So perhaps maybe is that we can sort of apply this analogy to the robot, in so much as that we want to don't really want to be caught in this tornado. We just want to come in, you know, allow a little bit of profit, and then we'll just get out. And the next trade come in, you know, we'll be allowed a little bit of profit, we'll get out. We don't want to hold for too long, because before we know it, you know, we might be undergoing a bit of loss and things like that. Now the thing is, with the pound USD, we would have been up quite nicely had we had a wider stop, but with the danger of a wider stop is that they can push price higher and higher, and then we are, you know, causing quite a lot of destruction to our account. So we'd got out at a stop loss twice, which is okay. It could have been avoided, but that's what the risk management's for anyway. So maybe the little analogy there of the two orcas, they're scaring the retail guys, pushing price higher. He's pushing price higher than this one's selling it, and then they'll take turns. So then obviously, you know, they're both going to profit inevitably, because this one might be at a loss, and then tomorrow will be at a profit, and this guy will be at a loss tomorrow, and they'll just exchange and just profit off this liquidity, and it's easy prey as well. So maybe a little analogy there. I said I was going to go for a walk, I didn't, so I'm going to go now, and we've got an Aussie CAD trade in, and it looks like they're going to play a little bit of havoc with the Aussie and the Kiwi today, because we've got the big risk event on Friday. We've got the Jackson Hole, so it looks like they're going to be playing around and toying with their prey today. They did with the pound against the USD, and they did with the euro against the USD. So it looks like they're probably going to do it against the CAD in terms of Aussie and Kiwi. So we'll just have to see how we go. Them to trade safely, and I think perhaps to scalp away could be the way to go for the robot, but we'll have to wait and see.